Hello, this is Well Decoded. Today we are asking one question that touches every household across Africa. What happens to a continent's future when its middle class stops investing productively? There is a hard data behind this and a clear path forward. Africa has 1.4 billion people, one of the youngest populations on earth, natural resources over trillions, and yet the average African household keeps its savings in cash, land, livestock, or informal groups like a job, chairman, and so. Here's what the number says: Nigeria, 220 million people, fewer than 2 million active retail investors, less than 1% across sub-Saharan Africa. Households' financial savings average just 11% of GDP. Africa's stock market capitalization to GDP sits below 30%. The US, over 150%. Every percentage point of that gap is money sitting in physical assets, not funding businesses, not compounding into retirement security for the families who saved it. So, why aren't Africans investing? 3 reasons: trust. Decades of currency collapse, banking failures, and hyperinflation taught African households a painful lesson. Former financial system can fail you when the system has betrayed you before. Land and gold feels rational. Assets. Stock markets, mutual funds, and bonds remain out of reach for most people, requiring minimum balances, formal documentation, and financial knowledge the school systems never taught. Unpredictable policy. Tax rules on investment change without warning across the continent, and when the after-tax returns becomes uncertain, the rational choice is to stay out entirely. Let's make this real. A teacher in Lagos invested $2 million into a mutual fund in 2015. She held it for 8 years. By 2023, it had grown to 4.5 million naira, more than double on paper. But Nigeria inflation averaged over 15% per year across that period. Her real gain was a fraction of what the numbers showed. Then came a new tax rule, new filing requirements, confusion from her broker. She withdrew everything, bought land in her village instead. She is not alone. Millions of African households are making that same calculation and arriving at the same answer. 3 things need to change at the policy level, but you don't have to wait for government to act. 1. Start with what exists. Platforms like Cowrywise already make mutual fund investing accessible to everyday Nigerians. No broker, no paperwork, no minimum that locks you out. You can start with as little as 1,000 naira from your phone. 2. Become consistent, not perfect. The teacher in Lagos wasn't wrong to invest. She just needed a simpler, more transparent platform. Consistent small contributions into a mutual fund is keeping money I do every single time. 3. Think long term. The data is clear. Patient investors build wealth. The problem was never that Africans don't save. It's that the system made investing feel complicated and risky. It doesn't have to be. Where would you go to a place? Just remind me now when you don't. If you have been keeping your money in cash or waiting for the right time, this is it. Use my Cowrywise link in the description to sign up today. It takes less than 5 minutes and your first step towards building real wealth start there. African has savings, it has the people, it has a group story. Now it needs you to act. Thanks for watching. Share this with someone who needs to hear. This is Well Decoded, building your financial freedom.